Placing a right amount of stop loss and take profit is very important in your trading. And if you are not doing that properly, then trust me guys, your winning trades can turn to losing trades, something like this. So in today's video, I want to give you an example of few trades we took in the priority group and the trades I personally took, and the importance of placing a right amount of stop loss. And also, if you're wondering when we can manage the trade, this is what I'm going to show in this video. When is a good time if you want to get a better risk to reward ratio out of the market, if you want to pull better profits out of the market. So let's start with this pair, which is pound CHF, one of my favorite pair to take my entries. So right here, these were the trades I sent to the members. One of the pullback entry right here, you learn in the priority group and in my MMTA course, a pullback entry, a bearish, bullish. Now, if you see here, we had a bearish confirmation and I set my take profit according to the ATR. ATR is a number right up there that keeps you with the volatility of the market. And if you're placing your stop loss less than your ATR, then the chances of hitting your stop loss will increase, because ATR shows how volatile the market is, and it is really important to keep your stop loss above the number shows right here. And most importantly, if you see here, the price hit my take profit and immediately pushed up. Now if my take profit was not according to my ATR and I was greedy here and I wanted to have a bigger take profit than my stop loss and I have no idea what to do in the market, then in that case, imagine that would be my stop loss hit. Also, one more factor we need to look at. We also need to make sure that where the price is heading to, and at this point I knew the price is heading towards the level of major structure support. As you can see, the price did push up dramatically from these levels. That is why these are the facts I look when I place my trades, that if I enter my trade, if the price is approaching towards major structure support, and then I check if my take profit is not below the structure here. So combining all that, I know according to the ATR, I am at my right place, the stop loss is placed at the right place, the take profit is placed at the right place, that if the market would reverse, then this is the zone where I want to exit my trades. Similar situation happened here. The price gave us a nice pullback entry, and if you are learning my course, you know we had another entry condition right here, a pullback entry condition, a valid condition, and similar. The price was in between the structure support, and that is why I kept my take profit under and above the structure support. And as you can see, the price did massively pushed up, and if my take profit was not placed correctly, then imagine that would be a losing trade. That is why I always say not having a proper take profit is as risky as not placing your stop loss. And now, if you ask me, Umar, when you manage your trade. So I personally manage my trade from the major area of values, which means when I'm taking a counter trade, if the price is pushing down in a downtrend and reach the certain level, which is a major structure level, in this case, a level of support right here. In that case, when I'm taking a counter trade, in that case, I take a better reward to risk ratio. Or if a market is trending in a very nice downtrend with a nice lower lows and lower highs, in that case I manage my trade. So let me give you an example here, the trade I managed before right here. So what do you see here? The way you can manage your trade is a very good example of a double bottom trade I took. As you can see, the price was pushing down from the major structure resistance, and since then the price is pushing down, and then this was a zone I was paying attention to take my counter trade. Now what happened is, as you can see, the price hit the level of major support where I was paying attention to take my counter trade. So right here you can see we had a nice double bottom pattern. So in this case, the way I enter my trade and the way I would manage my trade is, my entry candle is right here, this green candle, and I have entered here right here. So this was my entry, and I kept my stop loss below this rejection area right here. So stop loss was here. I have a protection of this rejection area, that if the price pulls back down with a wick, it will save me to hit a stop loss. So in that case, I always keep the stop loss below my rejection area if I'm taking a double top or double bottom trade. So in this case, the double bottom happened. Now, as you can see, my initial target was 1.4 to 1 risk to reward ratio right here. When I see a double tops and double bottom, I expect a very good risk to reward ratio. So what happened is, once I take my 1.4 to 1 risk to reward ratio, I push my take profit 1 ATR from the current candle, and as you can see, 33 pips from here. Let's do 120 pips right here. This is how I manage my trade. Now, a very interesting situation I want to show. Once my second target is hit right here, what I do, I mark the neckline of a double bottom. The way you can mark your neckline is from the wick of this pattern to the bodies of this pattern right here. So let me remove this right here. So this was the pattern and we had a wick covered and the bodies covered as well, from the bodies till the wick. Now, after my second take profit is hit, I want to see a price to come back down in this termination zone of this double bottom, which is our neckline. Once I have that, in that case, I want to look for one of the candlestick pattern, which is a bullish engulfing pattern or a pin bars. So what do we have after that? When the price hit my rejection area, we had a nice engulfing pattern. Let me zoom this up right here. So a nice engulfing pattern. Now in that case, I enter another trade at the close of this candle. I go 1.4 to 1 risk to reward ratio again. Keep my stop loss below the rejection zone and 1.4 to 1 is my target. So right here, this is how you can manage your trade. Trust me guys, if you have your rules there, I see this type of situation so many times in the market, and this is how you can make money in the financial market, by managing your trade. And trust me guys, if you manage your trades like this, only single trade can give you enough money that the other losing trade won't hurt you. So imagine how much money you could have made. We made our money here, we made nice profit here, then we made a nice profit here by entering from the neckline. And what do we have after that? We had a pullback, another bullish engulfer above 50 EMA, a nice take profit here, and then the price falls. So this is how you can easily manage your trade if you see a market is trending up or pushing up from the major area of value. So I hope you learned something out of it. If you want to manage your trade the way I manage it, from the major area of value, or when the market is trending down in a very nice downtrend or a very nice uptrend, a net gas is a very good example of that. I've been taking some nice sell trade and some little bounces when the price is pushing down here on net gas. If the market looks something like this, all I do, I look for a nice confirmation. If I have a confirmation, then I manage my trade wherever I can able to manage until the price hit the level of minor or major support, where we can take a little chunk of profit, and then you can keep on managing your trade in long term. So that is how you can manage your trade if you want to get a better reward to risk ratio. And I've also shown you the trade where my take profit was hit and price immediately reversed. That is why if the market is a bit choppy like this, consolidation, push down, then in that case I set up a fixed target and I exit my trades. Right here, a very good example. I do not have a double bottom yet, but the way I would manage this trade, right here, this was a trade alert I've sent to the members from this major area of value. We got nice engulfer. With that, the price pushed up, hit my take profit. Now, if you are my MMTA full course member, if you're in my priority group even, you know what do we have after that. We had a hit of 50 EMA. After that, we had a nice bearish engulfer. Now, if you follow all your rules, once your take profit is hit, you will not hang on with this trade after seeing this candle. Once I see this candle, I know we have a bearish signal, and this is the engulfer that happened below 50 EMA. At this point, I entered another short trade. So I did not send this trade to members. I personally took this trade. I hope the members and my students spot this trade, because this is my goal. This is what my motive is, to show you, to teach you the entry pattern so that you can take these type of trades in the other financial market. So after that, what do we have? We had a nice engulfer. Price did push my take profit. Now at this point, I'm still paying attention to this pair. If I have a push down, we will have a possible double bottom. I will keep my stop loss below, and if I have a double bottom with a nice engulfer, then I will manage my trade with a possible sign of reversal. So I hope you got a value out of it. With that being said, let's jump on to analysis, starting with natural gas, gold and crude oil today. Awesome. So the price did hit the level of the trend continuation zone, the level I've been mentioning from last couple of videos. And as you can see, I've just recently shown in my first part of the video, when the price is trending up and if the price is making new highs, then price use the previous level as a level of support, and it keeps on pushing up with the pullbacks. And as you can see, the price did pushed up and hit the level of resistance. So at this point, looking at the fact the price is now pushing up in a trend, we are not going to take a full reversal. I'm only expecting some pullback from here. Now the zone above, let me give you that, is 2.971, goes up to 3.225 here on one. I'm going to go through currency.com in a moment. This is a zone I'm paying attention to take my pullbacks. And as you can see, this zone has acted as a level of support, resistance in the past. That is why I'm looking at some pullback out of these zones. Now, we also have an overbought situation here in the RSI, so we can expect some corrections with a pullback. Now, I'm expecting a bearish engulfer here. Once we have that, you know that I'm looking to enter my sell trade. If not, then price can also form a double top pattern. So keep an eye on both patterns. Once we have that, we are going to enter our sell trade. This is a zone from where now I'm looking to enter my sell trade with these bearish pattern, or we might get a 382 candle and inverted hammer as well. So keep an eye here. Price can still push up within this zone, and then it can give you one of the entry reasons. So once you have that, target will be 1 to 2 ATR as explained earlier in this video. ATR is very important to keep your stop loss and take profit according to the ATR. So the price is now in a selling area, and from here I'm expecting some pullback, and those pullback will be enough to hit our target before the price can likely to push up and continue with a trend. But at this point, we are just looking for our sell trades with a little pullback, and that pullback, like I said, will be enough to pull some profits out of the market. Right here on currency.com, similar conditions. Let me give you the trend continuation zone. This zone is 3.002 goes up 3.203, a zone from where we are looking for the pullback. Everything is going to be same as Owanda. They're expecting bearish engulfer here, or the double top pattern, or the pin bars. Once we have that, we are good to go short. From here, again guys, I'm not expecting a full reversal, but a pullback that will be enough to hit our target, pull some profits out of the target before the price can hit 20 EMA and pull back up again. Right here, finally, the price hit the level of resistance mentioned in my last video. If you have followed me on my last video, then we had a nice push up here. From here, we had a nice swing low engulfer. That was one of the entry condition, a valid condition, and price has hit your target. So at this point, I'm still expecting gold to push up, just waiting for the price to break above this high. Once that happens, we have a very likely chance that gold will hit 1852, from where we will enter our sell trade with one of the entry conditions you learned. So at this point, I'm expecting a nice push down from here. Again, price is now pushing up after this nice double bottom pattern. If you have seen my first part of the video, you know how the price action works from these double bottom patterns. I'm not expecting a big push down, but a push down that can be enough to hit my take profit before the price can hit EMAs and push up with a trend again. So keep an eye here, look for bearish engulfers, or look for your double top patterns. Crude oil is now pushing up as expected, and the price was trading above 50 EMA and now approaching the level of major resistance. This level is 81.32, goes up to 82.97, a zone from where we are going to enter our sell trade. So keep an eye here. Once the price hit this zone, we will enter with one of the bearish condition, bearish engulfers, or of a double top pattern. At this point, I'm only looking to enter my buy trade, no more selling here. With a pullback, I will look for my bullish candle. Once I see that, I will enter my buy trade until the price hit this level of resistance. So that is it for commodities, guys. Any questions, any confusions, you can always buzz me on Instagram. I'll get back to you ASAP. Hope you trade green rest of the week. See you guys in the next video. Till then, take care. Have an awesome weekend.